as those big tax cuts went into effect. Here's the bottom line. President Trump actually underplayed the strength of the U.S. economy, which is spreading prosperity in ways that many experts said could and would never happen again. Joining me now to discuss Lily Valletta, she's the CEO of Culture and Intel, Mattie Duppler, Senior Fellow with the National Taxpayer Union, and Heather Zumaraga, Vice President of Vision for Funds. Let me start with you, Mattie. You know, I'm glad President Trump went and talked some about the strong economy because it is amazing. I'm not a big fan of the unemployment rate because it's so misleading. People drop out of the labor force and the unemployment rate goes down. That's not a reflection of America. What's a reflection is how many people are coming back and how many people are getting good paying jobs.
Charles, I agree with you. I think the president did a nice job touching a lot of important factors last night, but certainly spiking the football in the economy could have been a home run for him. And here's why. He talked a lot about unity and greatness for Americans. Nothing unites Americans more than feeling secure in their own economic circumstances, which is finally changing after 10 years of stagnation. You point out the unemployment rate, the fact that people are coming back into the labor market, people who are chronically underemployed, that's people with disabilities, people who have a felony record. Those are people who are finally getting out of the sidelines and able to find a job again. That really does speak to the health of the economy. But wages are another one, too. You mentioned the fact that we've got wages that are rising at 3.2% this month, but also the fact that people who are seeing their wages rise are at that lower 10% of the economic ladder. That in and of itself is so significant, and the president should be reiterating that every opportunity he gets.
You know, Heather, of course, you watch the market very closely, and we're in the middle of earnings season, and we're seeing in almost every company, every multinational that reports, for the most part, the strongest area of growth for these companies have been America, reflective, of course, of a much more emboldened, robust, wealthier, and more confident consumer.
Yes, the U.S. is perhaps the best place to invest if you look at things on a global scale. The IMF has recently downgraded global growth around the world, while the U.S. continues on pace for 3% GDP on an annualized basis. And you compare that with President Trump when he exited, President Obama, I'm sorry, that was 1.8%. And I think President Trump did a good job of conveying this message that there is growth in the economy. But you're right. I mean, he could have celebrated this feat of deregulation and tax cuts a little bit more. At the end of the day, in order for President Trump to win a 2020 re-election bid, I think he has to have a strong economy.
Well, you know what? He's got to have, I agree, he's going to have a strong economy, but I think it's going to be up to him to tout it even more because he's just not going to get the sort of
he needs
recognition.
You, Charles. He needs you running his campaign for sure.
Lily, you know, and it's all the nuances of our economy, I think, are benefiting from this. And I like what Mattie said with respect to, you know, when people have jobs, right? You're not going to go out and necessarily pick up a pitchfork or a torch and say, right, hey, let's go after the billionaires and the millionaires if you have a job and you hadn't had one for a long time. Isn't this really the ultimate elixir if we talk about unity and the country feeling better about itself?
Absolutely. It comes back to confidence, and you opened so eloquently talking about that. Consumer confidence has actually reached an 18-year high. And we're seeing it right before our eyes. For us, small business owners, the optimism index has also reached the highest it's ever been in 35 years. But it's not just about feeling good, but having more money in your pocket, disposable income, the buying power to keep fueling that growth for everyone. So I think there is a macroeconomic story here that we need to look beyond just the one number that gets reported, like unemployment, you were saying, and also how this affects minority segments, because the fastest growing segment of consumers in America are Black and Hispanic, and if they're feeling good, then it's going to be good for all.
How does that message get to Black and Hispanics in the communities themselves? Because it's always filtered. There's always a filter that says, well, it's okay, it's better, but there's always those kind of articles, even when it does finally arrive in, say, the Washington Post.
I think there's two agendas at play and forces at play. There's the emotion of the immigration rhetoric and things that may be said a certain way that we don't like emotionally. But on the other side, there is the impact in your home economics. And that, at the end of the day, ranks above immigration and other items that over and over again, polls, research, information that we've even run with big data shows that jobs and the economy, healthcare, education rank way above all of these other emotional, social items in political agendas. So at the end of the day, people make decisions with what impacts their pockets and their families.
Mattie, are we saying that, you know, Lily mentioned home economics, economics being a word derived, a Greek word that actually means accounting within the home. Are we seeing that right now? Do you believe in this economy? And would it be enough to necessarily overshadow all the other headlines we read?
Yeah, well, that's why I feel like the president should have really emphasized the economy more. It's making that connection for Americans, that public policy matters. It's not just a matter of waiting out a recession, that an economic expansion will continue, or that an expansion will continue without the right undergirdings of public policy. I think the president really needs to make that connection for Americans leading into 2020 so that Americans know when they're going to the polls, they're voting for politicians who will make choices that impact their bottom lines and their home budgets.
Heather, I don't think President Trump mentioned the stock market last night.
No.
Is sort of like, okay, we had enough hiccups last year. Let me stay away from that as sort of being the harbinger or the way to measure my success in office?
Well, you're right. I mean, if you live by the sword, you die by the sword. In essence, he was touting the stock market last year until the fourth quarter. The stock market is still up 30% since he was elected, and then in the fourth quarter, we had a pullback, a big pullback, about 20% in the S&P and the NASDAQ. That really caused a correction within the stock market. And then if you don't want to take the blame for that, then I guess you don't tout it on the upside as much. That's the fear that you would have to live and die by the sword. So he's not. But overall, I think he did a good job of conveying the message that those Americans that aren't directly tied to the stock market,
right.
Half of Americans somehow are tied through retirement plans and pensions, but those that aren't, you hopefully have a good job and your wages are rising. You have more money in your pocket. That's what matters.
That is what matters. Ladies, thank you all very much. Lily, Mattie, and Heather, appreciate it. Well, right now, stocks are flat. So what will it take for these markets to finally, we're right on the cusp, to finally break out?